Hello guys, welcome back to FX Beethoven Forex Algo Decoded. My name is JD. Today I'm gonna teach you market structure. We are going to do a study of highs and lows, but this time we'll go beyond a simple structure and focus on a complex structure and complex pullbacks. And I hope this is going to help you guys. Before I continue, I would like to remind you that you need to watch the whole video so that you will be able to grab those missing ingredients and add them to your trading style. Also, remember to subscribe to this YouTube channel so that whenever I add new videos, you will be able to get notifications on your device. Okay guys, without wasting our time, let's get started. Guys, you know that in foreign exchange, market structure is the backbone of this industry. If you don't know market structure, it's going to be impossible for you to start trading. Now, let's go beyond a simple structure. We already know that in uptrend market structure, we have a series of higher highs and higher lows. And in downtrend market structure, we have a series of lower highs, lower lows, and in the ranging market, you know, we'll be having both highs and lows that will be moving in a sideways motion. Now, let's go beyond this structure that we read in the books and go deep into complex structure that we see in a real market. You know that when you open your charting software, you are going to find that Forex doesn't move like this, doesn't move in a clean structure like this. It's more complex than we think of, and sometimes we lose our mind when we start doing analysis and we cannot find exactly where the market is really going and what we should be doing. But this time I'm going to break down everything so that you guys can start looking at the market in a different way. So what do we mean by a complex structure, and what do we mean by a complex pullback? As you can see here, this is an example of what we call a complex pullback. This is a complex pullback for bullish and bearish, and this is a complex structure for bullish and bearish market structure. Now, if you want to understand the structure, you have first of all to be able to identify where the market is coming from and where it is heading to. So let's say market is pushing higher and it retraces and then pushing higher. Once you have this, of course, you have a break of structure. Our structure high is broken here. This is the beginning of the new trend. Once the structure is broken, the market starts returning back here. From there up to here, you have to know that this is your trading range. Your trading range starts from the beginning of the movement that broke the structure up to here where the market is retracing. Now, whatever happens within your trading range is what we call complex pullback. Do you understand, guys? Whatever happens within your trading range is what we call a complex pullback. When market keeps making a series of higher highs, higher lows, or lower highs, lower lows, or a mix of both of them, this is what we call a complex pullback until market breaks the structure high. So once a structure high is broken, now our trading range is violated. Now what we do, we have to adjust our trading range. This is gonna be a new trading range right here, and then what we are going to expect is after this break of structure here, we are going to expect another retracement, creating a complex pullback, for example, and then We wait for market to come back to our point of interest, maybe down there, and then once the market start breaking this structure again, going higher, this is when we can initiate our buy order and targeting the previous range that needs to be broken, right? So this is what we call a complex structure. You are not going to see in foreign exchange, you are not going to see something like this. Sometimes it happens, most of the time you are going to see something like this. You're going to see something like this. This is what you should be focusing on. But if you want to understand this style of trading, this style of approaching market structure, you have to be able to identify your trading range. I repeat again, if price is going higher and makes a retracement, and then price goes high and break this structure and they start pushing it down, this is your trading range. You have to mark that zone and wait for market to come back to your certain level of interest, maybe here or somewhere here, depending on the structure you have here, because there are different types of structure that you have to look for here. If you find them, or if you find one, you know what you are going to look for in that structure before price even reach there. And once price is there, you are going to find a reversal there for a bull movement. And this is how you should be approaching foreign exchange. If your zone of interest was not broken and this structure high is broken, now this can be your trading range. This can be your new trading range, but pay attention. If your level of interest was not hit, and it is very important there, remember that market may come back and use this low as a liquidity and grab it, and then it goes higher. I hope you understand the point. Now, for a bearish momentum or for a bearish trend, when the market is going down, let me give you an example. Market is pushing down, market retraces, pushing down, market retracing with a complex pullback. Why is it a complex pullback? Because we have our range here and our range here. We didn't break our structure high, so whatever happens here is a retracement, is a complex pullback. No matter what happens, something like this, if we didn't break the structure high, it's still a complex pullback, and then you have to go down. So to approach a foreign exchange, you have to know your trading range. If you don't know your trading range, it's going to be difficult for you to start trading. Now, what do we really look for? We look for our zone of interest. You have to be smart in knowing what the market is seeking before it goes there. You have to know what the market is looking for, because this retracement happens for a reason. As I told you before, there is no accident in Forex. Everything is planned. Even be it news, be it whatever, everything is planned to comply with structure. That's it. I hope you understand this. Now, once our structure law is broken, now our new trading will start from here. This is going to be our trading range, and here. Now, what we're gonna look for, we are going to wait for market to come back to a certain level here, touch there, and then falls down, and we keep repeating the same. So if if let me give you one more example so that you guys can understand what I mean here and why you should know this. If price is dropping down like this, and then price start going down, creating something like a wedge, have you seen? And then it breaks and start going higher, retesting the level. This is your support level, your resistance level is broken right here, and then market breaks the level and then goes higher, and you try to buy from there, and you do something like this because you believe this is a wedge, and then you know what happens. Market comes back to the level of interest within the trading range. The trading range here. This is your trading range. Have you seen? Market comes to your trading range, and then market goes down. They do it for manipulation. They know what they are doing. They know that you know this pattern. If they form this pattern, you guys are going to join this movement, and then you buy, you lose your money, market is going down. Why is this important? It's because when you are on a lower time frame like H1 and you don't focus on what is happening on a weekly, that is how you are going to lose your money. H1 time frame is doing something like this, and because it is a lower time frame, you don't even see this. You believe this is going to go higher because our time frame will be creating beautiful structure. They are showing you the willingness on the part of the market to go higher, and then you join the movement, you start buying, forgetting that you are within your bearish trading range on weekly, and then the market goes against you. I hope this makes sense and it is changing the way you look at the market. And also you have to know you will have a trading range or trading ranges within trading range, right? So you have a trading range on a higher time frame. On what time frame also you will have minor trading range, and that is very, very, very amazing when it comes to making entries. You have price going down. This is your trading range. Price coming back, break the structure. Structure was broken. This is your trading range. Price create another complex pullback on maybe on a 30-minute and break the range, breaks, create a new range. Sorry, after creating a new range, it comes back there and then makes a strong downtrend movement. Range within another range. I hope you get the idea. Now we are going to use a real chart. I'm going to show you examples of what to look for, and then you will start realizing that trading is all about understanding structure. Trading is not really about drawing trend lines only, because I don't mean you shouldn't use a trend line, but use a trend line when you know what you are doing, right? So allow me to go to a real chart, and I'm gonna show you an example. Let me use a simple example here on a GBP, sorry, on USD JPY, and I hope that you're going to get the idea of what I'm talking about. This is a weekly time frame structure. This is a weekly time frame structure, and let's focus on the latest trend we have before market makes a reversal. Now if you focus on this level, your eyes should be here now. I'm just showing you how market was making movement here. So this is your trading range. This is your trading range from, let me use a full screen so that you can see it better. Okay guys, this is your trading range. You see how market was pushing down, retracing, pushing down. This is your trading range. Your job, never ever take a trade if market is not going to come back to your range. Once market comes back to your range and break the range, start going down. Okay, this is a minor range, but this is very important because it has engulfed the body of this previous range, which is here, and then this is your new trading range from here up to here. I will use a lower time frame for you guys to understand, but I'm trying to show you what is really happening on a weekly structure. On a weekly structure, the range, first of all, the main range, you have to look for imbalance. The first imbalance will happen on the body of the candle. The second imbalance will happen on the wick of the candle. So what do we mean here? You can see price was pushing down. This is the crosser price. This is the crosser price of this movement. This is the lowest price. This is the wick. As you can see, the candlestick shadow. Now price goes higher and then reject this level, and then it goes down. So the first imbalance is right here on the crosser price of this downtrend, and then the second imbalance is right here on the candlestick shadow, right? So we are going to focus on this is a broken range. This is a broken range. Once this range is broken, market will start retracing. Once the market starts retracing, our range can be from here or here, but this time let's focus on this level because I want to include the highs so that you guys don't get confused. So where is our break of structure? Our first break of structure is right here on the crosser price where we have the first imbalance. Our second imbalance is right here on the candlestick low. Now price is doing what? Price must come back and trade into the broken range before it starts going down. It goes down, breaking the first imbalance, coming back. Remember, structure within structure right here, and then it goes down, engulfing the candlestick wick, and then it comes back into the broken range again, and then start going down. This is the new range. I know you cannot understand this because I'm using higher time frame, and this is where I always start from, but let me use lower time frame structure so that it comes easy and clear, because I think this is a little bit messy, but I hope that you can see the ranges. Range broken, price comes back to the level. Range broken, price come back to the level. Range broken, price comes back to the level. Range broken, price tries to come back to the level, but this time you have a break of structure. Market is start making a strong rally somewhere to another range here on the monthly time frame or 12-month range. Now let me switch to lower time frame structure, and it's going to be very clear. Daily time frame, yes, of course. Now here is what you should be looking for. Let me show you what you should be looking for when you are dealing with structure. You see price going down. This is the overall structure, for example. Right here, broken the range, goes down, price comes back and break the range. If price was pushing higher, this should be your range. Price going higher, but it fails to hit the right institutional candle, and then it goes down and break the level. Once price break this level, your trading range is gonna be this level becomes your broken structure, and then your trading range now is this, from the high to the low, but this time we will consider the lowest low. This is the best approach you should be looking for, where the force is coming from, and price is going to hit a certain level of our interest and then start going down. If you are going to sell this market, you should be looking for this level. You should be looking for something in this level, and then this should be your target. The low should be your target. Market will eventually hit the low. Sorry, here will hit the low. You will use lower time frame structure to refine your entry. Market will hit the target. Now, what happens when the range is broken? Now, before this range is broken, you can see what was happening when the market was going back to our range, into our zone of interest. Market went down and broke this internal range right here. Have you seen? We have a range being broken. Market is coming back to the range and it creates a new broken range here. Then market must come back and then it goes down again to hit a certain level. This is what we call a complex pullback. I hope this makes sense. This is what we call a complex pullback. This is what we call a complex pullback. Market break the range again right here, and then it comes back into a certain level of our interest right there. And then when market is returning back, this is internal range. Internal range. After breaking this level, the range is this. So our trading range is going to be in this level. We are going to wait for market to come back into our premium level and then start going down. If you start this movement again, if you zoom in here, you are going to find another hidden range there when the market is going down here. Another push, market break the range. Our new trading range is formed here. Market is pushing back inside our trading range. We can add more sell, and still we are targeting this level. We know exactly what we're looking for. We know where the market is going. Now the structure was broken. Where is the first break of structure? The first break of structure is where we have the imbalance. The first imbalance is here on the close price of this movement. The first imbalance. This is the second imbalance, where the pin was. We have a pin engulf, or where the structural is engulfed. Now market is coming back to our range. Where is our range? We will choose the latest lower high. Remember, a valid lower high is the one that created the lower low. So we have so many lower highs here. 1, 2, 3. I would prefer this one depending on the structure I see. Now my range is gonna be, my new range is gonna be here. from this high to this low. As long as I have a pullback, I know this is gonna be my range. I'm going to look for a sell here. Market comes back to a certain level of our interest, then break the range. The first imbalance is here. We don't have the second imbalance, but we still believe in the bearish momentum. Price comes back trading into this smaller range and then goes down, breaking the level. Once the level is broken, now what I'm gonna do, I'm gonna change my new range again. Where is the break of the level? The first break is here. The second break is right here on this pin engulf, where the market has broken the structure low. So my new range is gonna be right here. No, there is no pin engulf here, but we have traded inside it. We have broken this level. Let me zoom in so that you can see it, guys. We have broken this level, and then my new range after breaking this level, my new range is gonna be from this high. My new range is gonna be from this high all the way down here. So I'm waiting for price to come back to my level of interest. My level of interest right there. My level of interest right there. And what I'm gonna do, I'm gonna sell from this level. Our time frame structure, can use our time frame structure, and your target is gonna be the lowest low right here. This is gonna be your target. You are going to target this level right here. Now market pushes down and break the level. What happens again, you see, after pin engulf, we have our new range here being formed. Our new range, always start the movement that broke the structure. Our new range, we have so many lower highs. I would choose this one to start the range there. Market goes down there and then comes back to a certain level of interest, and then price goes down. Then your sell should be from this level. You must do raw time frame refinement and then target the low. Have you seen, guys? Now this range is broken. Now we have another idea, but we don't jump into the market. We wait for market to do what? To show us a clear trend. Our new range is created for a bullish momentum. Let me remove all of these drawings. Our new range, market is broken here. Structure high is broken. Now a new range is formed here. I hope that makes sense. Look at where market has broken the structure, and from the movement that broke the structure is going to be your range, and the market must trade back into the broken structure, do something there, and then makes a strong rally. After breaking this level, this is going to be our new trading range. This is going to be our trading range, and this is going to be the broken structure. It's gonna be your BOS, your broken structure, break of structure here. So a broken structure is this one. My range is from here up to here. Market is coming back, touch there. This is not a good buy setup. Better you have to wait again. The new higher high is broken here. Once the higher high is broken, my range is gonna start from this movement. And this is the break of structure. Gonna start from this movement up to here. This is my range. Why do I call it a range? It's because after breaking this structure, market must pull back to the range, creating a form of a complex pullback on lower time frame here. I'm going to find the reason to buy here. I'll be looking for lots of stuff here, and then the market will go higher. I hope this makes sense. I hope it is changing the way you look at price. Maybe I will use another example, but this time when you are going to buy this level, you will find your level of interest and buy from there, and then your target should be this level. And this is how you should be buying or keep holding if you believe that market will continue to push higher. And you should know, once price break this level, first of all, if you want to start this structure, this movement, you have to understand what this movement was seeking. Movement was seeking something here, and it is very clear on what time frame. But this time, you see market, we have another range here, overall range that was not test. Market is trading into institutional candle right here. Broken range, market is trading into institutional candle. We don't know if market is going to break it, but if you get a reversal here, it's a time to sell all the way down here into untested range. But the overall target is that if you focus on this level, we still have a zone here that was not tested, and it maybe we may break this level and hit the level, maybe come back to finish the task here, and then prices start making a new rally of movement. Now let me switch to GBPNZD, and I'm gonna show you a bit on a weekly structure, and I hope this is going to help you guys. As you can see here, this is a broken level. This level was broken here. Now our trading range is going to start from this level. This is our broken range. When I say broken range, I have to understand. I have to zoom in, guys, because I want to make it clear. I have to remove this volume. Now this is our range. This is our range. Maybe you can choose the base or the closer price if you want. Now this is our range, broken. Market comes back into the range to test certain level, and then goes all the way down, fails to break, but retraces, eventually breaks the structure. Now our new range, this is the broken structure. You have to differentiate a range and a broken structure. This is a broken structure. The structure is broken. Now where is the source of the movement? The source of the movement is right here. The source of the movement is right here, and our trading range is gonna be this level. I hope this makes sense. Our trade, after breaking this structure, the source of the break is here, so our trading range is going to be this level. So market will always come back to the premium level if you use Fibonacci retracement. As you can see, price is trading above 50% of the level, and then we know that we are in the premium price. We may expect to see market going down again. This is our trading range, so we know that market will come back to test a certain level here, and then we will start having the mindset that GBPNZD is going to fall down again. So here is what to look for. It doesn't mean that it will fall down, it may even break and go higher, but this time you have to believe what is happening. Now let's switch to lower time frame structure, and we will start this range from this movement up to there, and you will start seeing how structure is really crazy, how structure is amazing. I have to remove these drawings. Let me switch to like daily. Let me see if daily is clean. Is daily clear? Okay. The daily structure is very clear. Now on the weekly structure, we already know. On the weekly structure, we already know this is our range. This is our trading range right here. This is our trading range, and we know market is going back to hit a certain level, and I can promise you we are going to hit a certain level here, grabbing liquidity here. This is the liquidity sitting here, even if it can be called a structure that broke in this range, this internal range you have here, but this is this will be the liquidity that the market is seeking. I'm hoping that, I'm expecting GBP to do what? To come all the way here and take out this FTR, failure to return structure, and then market we start dropping again. This is what I believe. But if price break this level, we may have some form of structure, and we can start considering this range again. Now I want to take you step by step here and show you how GBP is moving. During this downtrend, this was a broken range. Market was pushing it down, retracing, then first to go higher, and then pushing down. So this structural is broken. Your eyes should be here. The structural is broken here, as you can see. Remember what I've been teaching you. Market is coming back into a certain level. So this is your trading range. Whatever happening here is a complex pullback until price goes back and break the level. Have you seen? Try to draw it. Market goes down, goes higher, goes down, breaking the structural. Now our range is here. Price coming back to hit a certain level of our interest, and then price goes down, breaking the new low, and then price comes back to the range, and then we will have a sideway movement here. But if you zoom in here, you are going to find another beautiful range to trade. Then price goes all the way down. Price goes all the way down, breaking the structural again, complex pullbacks right here into our level of interest, and then price start going down, breaking our new range again, price coming back, trying to hit the level, pin engulf here. It's a signal. If you have engulf of the pin, the high is broken here, we start having another mindset. You can see the high was broken here. Let me use a horizontal line, horizontal ray, so that you can understand it. This is the pin engulf that happens. We know that our trading range is supposed to be here and here, but remember we tend to focus on the latest lower high that created the lower low. This is the valid lower high. Right now it is the low is now engulfed The low is now taken out. So we start being conscious that the trend is likely to change. Besides, if you add a trend line, you can see that market was trying to go away from the trend line. That was a signal. And what happens, market come back and not break this level, instead went higher and broke this structure. When market was here, being honest, this was a broken range from here. The first range is broken here on the crosser price of this swing, another engulf of the pin here. Then my trading range is gonna be this one. Being honest, for those who were with me on my WhatsApp group, you remember I was telling you that I'm expecting GBP come back to this certain level here before we go higher. It didn't happen. What happened is GBP made a short-time retracement and then break the structure high, and it goes higher again. Now I knew this was a new trading range. This is, sorry, I knew I had a structure high being broken here. Let me show you something. The structure high is broken here. So we have a high, we have a low. The structure high is broken here. After the structure high being broken, my trading range was going to be from this low to this high, right? And this is my broken structure. I always wait for market to come back to the broken structure within the trading range here, and I expect a reversal here after hitting a zone of my interest, grabbing liquidity here, and then the market start going higher again. As you can see, maybe if you don't understand this, let me draw it here. We have a push here. We have something like this. Of course, after having this, you expect the market to come back to this level and then go down here. But we have a price breaking this structure again. Now I have a break of structure. I have a break of structure right here. After break of this structure, what is my new trading range? My new trading range is gonna be from this low and this high here. So whatever happens when the market is coming back is what we call a complex pullback. I will wait till market hit my level of interest here. You have to know that. You have to know where liquidity is. You have to know how to identify the right level the market is seeking. And then once market is trading in that level and I get the reversal, I'm going to buy GBPNZD, and then my target is gonna be the previous high because it must be broken. I hope this makes sense. And this is what you see here. This is what you see here. Price going higher, retracing, going higher, break the structure. We are hoping that price is going to drop right here. You sell here, and then market, maybe you catch some pips and you see market is going to break again, maybe a break even or partial profit here. And now what you have here is this one. The structure is broken. Remember, a valid lower high is the one that creates the lower low. So this is the valid lower high that creates this lower low. So the break of structure is happening here. And then what is going to happen from this range to this range? Sorry, from this low to this high, this is going to be my trading range. And I'm going to wait for market to come back into my discount zone below 50% of my Fibonacci. This is my Fibonacci. I use As you can see, I use 0 and 100 and 50. I want market to come back below 50% of my Fibonacci into the level of my interest. And then what I'm gonna do, I'm going to find a reversal in this level. Once I get a reversal here, I will use the same method. I'm going to buy GBPNZ, and my target is gonna be the previous structure high, because it must be broken. So your buy should be on this level. Must buy on our time frame structure. Maybe you can buy from here when market is pushing higher on our time frame structure, and then your target is going to be this structure high, the structure high right here. I hope this makes sense. I hope you guys, you understand what the market is really doing. As I told you, this is your zone. Have you seen? There was one after this break of structure. After this break of structure, complex pullback until market comes back to a certain level of our interest. Then we are going to go long here, our time frame entry, and then target the previous high right here. That is how you should be looking at this trading side. That is how you should be looking for structure, looking at the structure. A way to remind you, if market is going higher, this is your range. The structure high is broken here. Market comes back to the range. Now the range is broken. The new range is formed here. Market comes back, do something, and then goes higher. If you put a trend line here and you think you are going to sell this movement all the way down, you are a loser. You are going to lose your money. So focus more on understanding what the market is doing, complex structure. So I didn't go deep into this. My interest was to show you really what the market, how the market moves, to give you an idea on what to look for. If you need more refinement on structure, if you need deep understanding of structure and different codes of market structure, make sure you text me on my Telegram. Check the links below in the video descriptions. You will find there, and I'm going to help you guys in understanding structure. If you want serious mentorship, also you have to contact me. I'm going to help you guys understand structure. Thank you very much. My name is JD. Make sure you subscribe to this YouTube channel. Make sure you follow me so that you continue to drop these skills that nobody's going to teach you. And I hope this is going to change the way you trade, guys. Understand structure. Forget about the simple structure. Focus on complex structure. Focus on complex pullbacks. That is how you are going to start understanding how institutions are moving the market. Thank you very much. May God bless you. May God bless each trader. May God bless Africa. And I would like to send my message to Tanzanians who lost their president. Be sorry, guys. Be strong. And I hope that your vice president is going to do well these days. Thank you very much. May God bless each and every one of you.